what's on the agenda today? So we're going to talk about flood insurance. So a big misconception is if a house is on the ground and has no crawl space is on the slab, I can't get flood insurance. Or if I'm 2 feet under base flood elevation, I can't get flood insurance. Well, first and foremost, I've yet to see anyone have an issue getting flood insurance. It's actually a requirement if you have a mortgage on your house. So if you're financing your house, if you're taking out a mortgage, the mortgage company, the bank is going to require you to take out a flood insurance policy. Okay? What will end up happening though is you will most likely pay a premium depending on your base flood elevation versus FEMA's requirement for that specific area, for that specific house, okay? And so some of you who are kind of nervous about that, what I am seeing is your flood insurance, if you are roughly 1 to 2 feet over base flood elevation, you're going to be paying roughly $470, $500 a year, okay? And again, depending on location, right, and size of house, and this, that, and the other. So we can get into details. This is just kind of a blanket, general video statement, if you will. And so you've got roughly $500 a year, right, if you're a foot to 2 feet over base flood elevation. And now if you're a foot or more under, right, so if you're like 1 to 2 feet under, you could be paying, depending on, again, where you are relative to the bay, the ocean. So specifically what I'm talking about are lagoon front homes, if you will. So you're not on the bay, you're on the water, okay? And so you're looking at anywhere from $1,000 a year. I mean, I've seen some about $700 to $900 a year. Again, general statement, on average, $1,000 a year, to what I've seen kind of the higher end be about $3,300 a year. And so you've got to ask yourself, you being the buyer, am I okay for 30 some odd years, right? So 30 years I take out a mortgage, for 30 years holding on to a flood insurance policy that's going to cost me X dollars per year, right? Or does it make sense to raise it? So, if you're paying $1,000 a year and you're paying that for the course of the mortgage, and you plan on dropping that insurance policy once the mortgage is paid off for, well, $1,000 a year, 30-year mortgage, that's $30,000. So is it better for me to spend the roughly $100,000 just going to cost me to raise, right? And so now when we're talking about raising, just know that's a general on average, and that includes the raising, the pilings, the site engineer, the new subflooring, depending on if you've got a crawl space or not a crawl space. So again, just kind of an average number to throw out there, but more times than none you're going to be close to it. So am I okay paying that $1,000 a year for 30 years? It's going to cost me $30,000 versus raising $100,000. If it's $3,000 a year, well, now it's kind of you're going to spend that money regardless. So do I raise it now, or do I spend the money and not raise it? So maybe we look at renovation loans, which allow you to raise the house and mortgage the cost of raising. But again, flood insurance, we need it, we can get it. You will pay a premium depending on your base flood elevation versus FEMA's guidelines, right? And you will be required to obtain flood insurance if you have a mortgage. So throwing that out there, little tidbit. Feel free, like, share, and comment on anything that you're curious about in real estate. And if you're more specific, right, waterfront, right, because there's so many things, little nuances that most people don't realize in a waterfront community. Feel free, comment, and ask below what you want to hear. I'll see you on the next one.